So I think this year, one of the key numbers to look at is the property investment growth, right? So right now, I think it's still early stage. We're not seeing a very strong growth in the sector. But I think across 100 cities in China, we're seeing very strong demand for property sales already. All right, so I think over time, by the middle of this year, the developers would be running out of inventory to sell, because they haven't been building for the past 2-3 years. So as a result, you should see starting from the end of the second quarter, property investment should pick up as well.
But that would mean in the interim inflation pressure because of property prices. How?
Yeah, I think normally when property price goes up and people buy more property and use more money towards their property, then inflation pressure is actually in check, right? So because the way Chinese CPI calculation is slightly different from the US, right? So we don't have the owner equivalent rent in the CPI calculation. So I think, luckily and unluckily, unscientifically, that's how you get away with, a stronger property price inflation, but a tame overall consumer price inflation.
What's it going to take in terms of the data for, I suppose, international investors to start believing in this story? Because you look, and we're relatively bang in line, but you look at how the activity has been going in terms of the flow. Long onlys have been pulling out of China tech. They've been basically shorting. They're not grossing up. And you've got the flip side, the money that is coming in is going into A shares. So is it we need to see more on retail, we need to see more on consumption? What kind of a number do you think would assuage the markets that this is for real in terms of that recovery?
Yeah, I think the onshore market is sort of, having a lukewarm reception towards these numbers. And we're still in a very early stage. And also geopolitics, as you said, is affecting how the market is performing, especially on the onshore market, which has been quite tepid since the beginning of this year. I think just from the low base alone from last year, that should give you 4 to 5% growth, right? So I think right now, much of the recovery is actually recovering from a very low base. So it's not sort of an extra work that the government is doing to stimulate the economy. And also, given the record lending in January and February, one could even say that, this set of number is within expectation, but it's actually weaker than it should be, given the strength of the stimulus in the first 2 months of the year. So I think, time will tell. I think, towards the end of the second quarter, if we see a recovery in the property sector, then people will start to be convinced that, the recovery is for real.